It's a very beautiful Friday morning here. Good morning, every single one of you. And how are you all doing this morning? Let's quickly confirm that we are on the same page. So if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that we can get the session started. If you can see my screen and you can hear my voice clearly, I would love it that you type in hi so that I can get a feedback that we are good to go. So let's see what's happening right here in the comment section. I'm trying to load up my comment section area. All right. Oh, thank you very much, Carrie. I really appreciate that. Good morning to you. All right. Thank you very much, Badass King 221. Good morning. 208. Good morning. 815273. Goston. All right. Thank you very much for this confirmation. So I want to be taking this as a confirmation that we are good to go. Oh, somebody says here that my sound quality isn't that good. So let me quickly check my monitoring device here and see if things are good. Hello, can you? Hello? Hello? All right. Okay. Thank you very much. Thank you very much, 221. Okay, so I'm so excited to welcome you to another wonderful session on the X-Trend Speed Live. My name is Sheriff Garamola, and in the next 1 hour, I will be your host and driver, where I will be taking you through on a trading journey where we shall be evaluating the financial markets using technical parameters to identify trading opportunities lining up for us today. Well, today is the last trading day of the week, and obviously we want to be rounding off on all the pairs we have been monitoring by moving our stop loss accordingly, locking in some profit, and then we also want to be having a fresh look at the market today, as most of the time, whenever we have a huge move in one direction on Fridays like this, most participants in this market will likely want to be taking their profit, and this will likely be reflecting on the chart as a retracement move, which might likely move against the prior leading trend. So in that regard, we are going to be taking all this into consideration while evaluating the chart. Then, as well, on the economic calendar, there really is not much to see here, only for the fact that we have something on the USD, which is the publication of the S&P Global Manufacturing Index, which we are going to be looking forward to in, let's say, 3 hours 45 minutes from now. So this is also, though it's not really an high impact event, but we also want to see how the market's going to be reacting prior to this event or after the event. Then we have okay, we are not following anything on the euro, the GBP at all. So we are only going to be focusing on the publication of the S&P Global in terms of the macroeconomic events for today. So with that being said, I want us to dive in right into the chart and let's see what is really going on in this market. So, as usual, the first commodity we are going to be looking at this morning is the US oil. And obviously, in fact, I'm just smiling here as we have a very profitable situation running at this particular point in time as price action moved as expected, as projected during the live session yesterday. So, where were we during the live session yesterday? We were around the $77.50 level. Remember, we have been enjoying a bullish momentum since the beginning of the week after price broke out of the $71.50 level. And we had the first position running right above the structure here. We had the second position running here. Then we also had the third position running on Wednesday at around the $75 level. And we had the fourth position running at the 75.50. And yesterday, we actually took advantage of another opportunity right around the $77 area, which didn't move very well as we saw sellers take over the market around the $77.50 level. So we have quite very profitable prior to the trading activities for the New York session yesterday. And one thing I laid emphasis on yesterday is that we have two possibilities that we shall be looking out for. And then to guide our trading activities, I was able to identify two structures. That is the resistance point here at the $77.50 level. And then we also had the support level here at the $76.80 area. And what we said here yesterday is that for those who had missed out on this buy position here, that we want to be patient enough to look out for a breakout of the $77.50 level, followed by buying pressure right above the structure in our lower time frame so that we can join the potential move to the upside. But this is not what happened here, as the second perspective was what happened. And I said yesterday that if the sell pressure here continues, remember we had a sell pressure here a couple of weeks ago, a couple of days ago, and then I told you that if sellers takes over the market here and breaks down the $76.80 level, then we might be having a reversal pattern, which will be coming in the form of a double top structure. As you can see here, we saw the first touch here, price came down here, we saw the second touch at this point, and I told you that if a breakdown of the neckline of that reversal pattern happens, then a retest of structure followed by selling pressure, we want to be taking advantage of the sell move to the downside. And this is exactly what happened here. As we saw the breakdown of the $76.80 area, price came back to do the retest of structure, followed by selling pressure around this area on our lower time frame. And in fact, it was a very good setup for us to join that decline to the downside. And for those who are taking advantage of this move yesterday, very well done to you guys. Kudos to you guys, as currently you will be running with over 270 pips in profit if you are taking the first position. And I also laid emphasis on the fact that the current structure here has a tendency of giving us multiple entries on the US oil, as we also identified the $76 area also, as if we cite a breakdown of that structure as well, that a retest selling pressure right below that level on our lower time frame is another good opportunity for us to add more position to that trade. And if you're also taking advantage of this move right here, well done to you for taking advantage of that move, as you will have added another 180 pips in profit on this one. So kudos to you guys. Now, the next thing we want to be doing at this particular point in time is to lock in some profit. Then I want to make some clarity here. And if you remember what I said at the beginning of the session, I said Fridays are always Thursday, Fridays are always these days that participants who had made profit earlier on in the week want to be taking some profit, and this is likely going to be reflecting on the chart as a retracement move. So remember, we had this impulsive move since the beginning of the week, which took price back into the $77.50 area while we started seeing sudden pressure, and this might likely be a retracement of that impulse leg, after which we might start at one point in time start looking out for buy pressure around this area that might incite another wave of bullish momentum. So we want to get ourselves prepared to take advantage of that move as we head into the New York session today. So the first thing I'll be saying here right now is move your stop loss accordingly. Let's lock the sell positions in so that we don't get caught up in any sudden pullback that might likely happen here that will take us out of that position. So I'm somewhere around the $75 level, above that structure, 75.50, 75.50 or 75, above the 75 level is most appropriate for us to lock in some profit at this particular point in time so that we can give room for price action to breed. So right now, let's quickly take into consideration this impulsive move that started at the beginning of the week, and let's use that as a projection for where this retracement move might likely end. So if we bring out our Fibonacci retracement tool at this particular point in time and run it through the previous impulse leg, we should be aiming at an area between the 50 and the 78.6% of the previous impulse leg as an area we shall be projecting that the retracement phase might end. So if we do that, I would like to draw out that zone. So we should be having target for sellers here for sellers, all right, then we should be having this area as a potential buy zone. That is, if we start seeing buy pressure around that area or a reversal pattern in the form of probably a double bottom structure, a EVA's head and shoulder pattern, whatever it is, then we want to be taking advantage of that move. So let me quickly identify this area for the sake of clarity. All right, so let's delete the retracement tool. So here we are. So we have a huge TP target zone for the sellers. So that is between the $74 level and the $72.50 area should be an area we shall be looking forward to the TP target for this current sell position that we are in right now. And if you look at the $72.50 level, we saw how that level was broken at the beginning of the week, remember, which also shares a confluence with that trend line that was guided selling momentum since last week. So we had the breakout of this $72.50 15-cent level. And from a technical standpoint, whenever we have a breakout of a structure like this, we expect that one point in time, there is a likelihood that price might come back, do a retest of that structure in anticipation of another wave of bullish momentum. So we want to be taking all these structures into consideration while we monitor price action. So at this particular point in time, we're at a very critical point in this market. And for those who had missed out on this sell position we took advantage of yesterday and during the earlier hours of today, let's see if the market is going to be giving us another opportunity to add more position to our existing trade. So right now, we are at a very critical point, and that is the $74 level here, where we want to be patient enough to see how price is going to relate to this current structure in order to decide if we are going to be buying or probably continuing that short move into the $72.50 level in anticipation of that bullish momentum I said earlier. So what I'll be doing right now is to advise us to remain patient here. Let's see how price is going to relate to the $74 area in such a way that we might be having buy pressure right above the structure that might incite another wave of bullish momentum. So that is why I said we should be moving our stop loss accordingly to lock in some profit, just in case buy pressure resumes from that area that might likely send price to the upside. So we want to be getting ready to even join that move when it finally happens. Then the other possibility we could have here is price breaking down the $74 level here with selling pressure right below the structure on our lower time frame. It could be our 5 minutes, 3 minutes, or 10 minutes time frame. Look out for selling pressure below that structure. Then we want to be adding more position to our existing trade. And if you are not yet in this trade, this is another opportunity that the market might be presenting to us to join that move to the downside. So at this particular point in time, we are within the tick profit target zone. So let's see how far this retracement phase is going to go. So we have a maximum point below the $72.15 level, and then we have the lowest point at the $74 area. So let's see how price action is going to relate to the structure here in order to decide on what our next line of action is going to be like. So I hope I made myself clear here. If you have any questions regarding what I just explained, feel free to drop your inquiries in the comment section, and let's see how I can be of help in that regard. So if we start seeing buy pressure here, we also want to take that into consideration. So if we start seeing buy pressure around this area, then we want to be scaling down to our lower time frame to look out for reversal pattern. What I mean by reversal pattern, if you know your technical structures very well, you double bottom structures, inverse head and shoulder patterns, wedge, whatever it is, look out for breakout retest of structure in our lower time frame. Then you want to be joining the rally to the upside. So ensure your stop loss is moved accordingly, lock in some profit here, and let's see how price action will relate to the $74 level. So if you have questions, feel free to drop your inquiries in the comment section, and I will be taking the next 10 to 15 seconds to read through the charts and see if there are any questions before I move on to the next option. All right, so let's run through the chart and see what is happening here. Okay, we have 221. Glad to have you. All right, one calls my name. Hello, how are you? All right, Donate XD. Well, I'm not sure. Okay, thank you for that compliment to one. All Right. All right. In the absence of no question, I guess we are all on the same page here. So I will be moving on to the next option. So as usual, the next option we are going to be treating is going to be the US tech. And in fact, the US tech also went significantly well in our favor yesterday. So let me quickly do a replay of what our expectations was during the live session yesterday. So yesterday we were around the $11,560 level. Remember, we are right above the structure after enjoying this bearish momentum that broke down the 11,750. Remember, we took advantage of this move, though personally I missed it anyways. But I told you that a breakdown of the 11,750 on Wednesday is going to be giving us another opportunity to join that bearish momentum to the downside. So we have been enjoying this bearish momentum since the early hours of Thursday. And during the live session yesterday, we were around the $11,560 level here, where I said we are going to be looking out for two possible options to trade this at this point. So the first scenario was that if price comes back into the $11,700 area, where we start seeing selling pressure below the 11,700, then we want to be looking out for selling the US tech at that particular point in time. And the other scenario I painted here was that if a breakdown of the 11,560 followed by a retest of structure, we want to be joining the decline to the downside. And the later is what happened here as we saw the breakdown of the 11,560. We saw the retest of that structure, and in fact, price continued to trade to the downside. For those who are taking advantage of this move, kudos to you, as you will currently be running with over, let me see, over 300 pips in profit if you are taking it right below the 11,560. And in a matter of fact, the market also gave us another opportunity during the early hours of today after we saw price action caught within the consolidation phase between the 11,380 and the $11,330 area. And whenever we have a structure like this, we always want to be patient to wait out for a signal to happen, which is likely going to come in the form of a breakout of the channel or a breakdown of the channel so that we can take advantage of whatever direction the market is dictating. And instead, we had the breakdown retest of the 11,330, giving us another opportunity to add more position to our existing trade. So if you are taking advantage of this move, very well done to you guys. So the next thing we want to be doing right now, if you are taking it right below the 1130, you will currently be running with over 100 pips. Coupled with the over 300 pips here, definitely you will be having over 400 pips running in profit at this point in time. So we want to be locking in our profit right now so that we don't get caught up in any pullback that might likely happen. So what we want to be doing is to lock in some profit somewhere around 11,330, which will be serving as a break-even level for the second sell position here. And then it will be about how many pips for the position right below the 11,560. So this will be around 240 pips for that one. Then it will be around a break-even for this current structure. So for those who had missed out on these opportunities that we took advantage of here, let's see if the market is going to be presenting us with another opportunity to add more position to our existing trade. And if there is a likelihood that we start seeing buy pressure, then obviously we want to be getting ready to buy the US tech. But before we go into the details of what our expectation is going to be like for today, I would like us to scale up to the daily time frame. Let's quickly have an holistic view of what is really going on in this market. If the selling momentum that we have been witnessing here in the last 24 hours will continue to hold, or we're going to be witnessing some buying pressure at this particular point in time. So in this regard, we want to be scaling up to the daily time frame. And right on the daily time frame, what do we have here? Well, obviously, when we look at the structure here on the daily time frame, it is very, very obvious that price action has been on a long-term bearish momentum. So we had a bearish trend line here figured out after connecting the series of lower highs. So we had this bearish trend line figured out here. As you can see, this line has been guiding selling pressure since the beginning of the year. In fact, we had another sharp rejection of those bearish trend line here during the early days of this week to further emphasize the strength of the sellers at this particular point in time. Now, if we zoom closer into the current structure here, that is what has been happening during the later half of this year, we can see that there is an interesting situation that happened around the $11,000 level in the month of June, as we saw that buyers came in here to negate all selling pressure, as every attempt by the sellers to break down the $11,000 level has been met with strong resistance from the buyers, hereby pushing price to the upside here. So we saw that this level at the $11,000 area somewhat has a buying pressure. So we were able to identify the demand zone here. And if we look at what happened here in the month of September, stroke the later part of, the later part of the month of September, stroke the early days of the month of October, we started seeing buying pressure around that area as well. So what we said here is, let's identify this area as a demand zone, and let's see if this demand zone will be able to hold buy pressure. But unfortunately for the buyers, as soon as price got into the $11,700 area, we have been witnessing selling pressure around that area. Matter of fact, this selling pressure around that area lasted about 6 to 7 weeks. And as a result of this, we were able to identify the structure as a very important key level that we have been using as a yardstick for our trading activities on the US tech. So now, zooming into what happened in the second week of the month of November, we witnessed this bullish pressure, which finally broke out of the $11,700 area. And there is something interesting about this structure here. As we saw after the breakout of the 11,700, we saw how price action has been caught within a consolidation phase between the 12,090 and the $11,500 area, to further emphasize the indecision in this market at that particular point in time. So it took over about how many months that is? That's about a month thereabouts. Price was caught within a consolidation phase, as participants were not sure if the breakout of the 11,700 might likely incite a bullish move to the upside, or probably the breakout of the 11,700 could turn out to be a false breakout, where sellers could likely come in, considering the long-term bearish momentum here, to further push price to the downside. So we were caught in a huge consolidation phase here. So this is what we had here at the beginning of this week. Then we said, okay, fine, if we have this kind of situation here, price caught within the 12,090 and the 11,500, then let's use the structure to guide our trading activities for the week. So at the beginning of the week, we saw that we have been witnessing buy pressure around this area since the beginning of the month of November. And during the later part of last week's trading session, we saw buy pressure here. And during the early hours of this week, we saw another buy pressure here. Unfortunately for us, we were able to catch that move, which gave us about 530 pips on our first position and about 400 pips on our second position. So we had roughly about 1,000 pips on the buy position that we took advantage of here right at the beginning of this week. Now, with a very sharp rejection of that bearish trend line, which has been holding selling pressure since the beginning of the year, which also shares a confluence with the $12,090 level. And if you look at how this candle transitioned into, it's in fact a shooting star candle, which from a technical standpoint has a tendency for selling pressure at that particular point in time. So there was a likelihood that price might continue to trade to the downside. And a matter of fact, during the course of yesterday's trading session, we saw the breakdown of the $11,700 level. Remember how important that level has been for selling pressure. In the past, we saw what happened here in the month of September. We saw what happened here in the month of October. And we saw what happened here as well. And then price broke down that structure one more time. Then we were saying yesterday is that if price breaks down that structure and we start seeing selling pressure around this area, which further breaks down the $11,500 area, we want to be joining that sell momentum. And lo and behold, we were lucky enough to take advantage of that move, as sellers finally take out all the buy position here to give us enough liquidity to push price further to the downside. So right now, we are within our TP target zone, and I've told you earlier that we should lock in some profit here, as there is a likelihood that buy pressure is likely going to be coming in from here. And why do we have our TP target around this area? Well, I will show you why that is. The reason why we had a TP target here was simply because of the fact that we took into consideration this impulsive move to the upside. And you know, whenever we have an impulsive move like this, we expect that one point in time, those who are taking advantage of this opportunity here will want to be taking some profit. And if they are going to be taking some profit, this is going to be reflected on the chart as a retracement move. So we are beginning to see the retracement move now, and how far will this retracement go is what we don't know. So what we use now is to bring out our Fibonacci retracement tool, run it through the previous impulse leg here, and what do we have? We have between the 50 and the 78.6% area as an area where we are going to be looking out for TP target for the sell position we took advantage of yesterday, and we are currently right within that area. So now there is a catch here. The TP target we have here might likely, the TP target zone we have here might likely transition into a reversal pattern, which might incite the second wave of the bullish momentum that started here in the month of November. So let's say our price action is going to relate to the structure around the $11,200 area in order to decide if we are going to be selling to the downside or we are going to be buying from this area when we sight a reversal pattern around this area on our lower time frame. So these are my views here on the daily time frame. Let's quickly run back into this into the 1 hour time frame and let's see what is really going on here. And we are going to be using this. Remember, we had a sell pressure here. Hold on a second, let me show you something. So we had sell pressure here at through the first week of the month of November, and price is right back into that structure. So we want to take that into consideration as well. So I would like to connect these points together, and then let's give this a red color. Okay, wine color instead. And then what figure is that? Okay, the 11,000. Okay, let's call it 11,200. So for the sake of clarity, we should label it $11,200 level. So we are going to be watching our price is going to relate to the structure during the New York session today to determine if we are going to continue to sell or we are going to be getting ready to buy the US tech. So let's scale back down to the lower time frame. Let's see what is going on around that area, and let's see how participants in this market is actually relating to that structure. So here we are on the 1 hour time frame. So let me try and bring this into our purview, and let's zoom it into the current structure here, as this is where our focus is going to be for today. So right now we in the last 3 hours now, we have been witnessing buy pressure from that level. So you can see what we have here. So we've been witnessing buy pressure around that area. So there is a likelihood that we could see a reversal pattern around this area to incite a retracement move of the previous impulse, probably back into the 11,700. Remember how important the 11,700 is on our daily time frame. I told you that level has been a strong selling niche for participants in this market in the last 2 to 3 months. And we saw the breakdown of that structure during the New York session yesterday. We saw the breakdown here. And from a technical standpoint, whenever we have a breakdown of a structure like this, we expect that one point in time price is likely going to come back, retest that structure, and incite another wave in the direction of the prior leading price action. So this is what we are going to be looking forward to if we start seeing buy pressure here, probably a reversal pattern somewhere around here, then a breakout retest of that structure in our lower time frame is likely going to be pushing price to the upside. So that is one scenario we are going to be looking forward to here. Then the other scenario is if price does not climb up and then instead price drops below the 11,200. Remember how important that structure is on the daily time frame. Then we start seeing selling pressure below that structure on our lower time frame. Then we want to be taking advantage of adding more position to our existing trade, hereby extending our TP again further, probably into the $11,000 level or the $10,950 area, and let's see how far this retracement phase is going to go. However, if we start seeing buy pressure here, let me go back into that buying expectations around this area. So if we start seeing buy pressure around this area in such a way that price climbs up into the 11,330, remember this level was broken during the early hours of today. this might likely be another opportunity to add more position to our sell trade if we start noticing selling pressure right below the structure, right on our lower time frame. Then we could actually join that decline to the downside, and a further breakdown of the $11,200 area retest of structure here will further welcome additional position to our existing trade. So I hope we'll be on standby to catch this move when it finally happens, but ensure you have moved your stop loss, lock in some profit right now, and let's see how price action is going to be relating to both the $11,200 and the $11,330 area in order to decide what our next line of action will be. So if you have any questions whatsoever, feel free to drop in your inquiries in the comment section, and let's see how I can be of help in that regard. So I will be taking the next 10-15 seconds to read through the chart and see if there are any questions before we move on to the next pair. So we see 3221 here says, how about USDJPY? What do you think? All right, we obviously going to be looking at the USDJPY. Remember, it's one of the pairs we have been monitoring since the beginning of the week, and I think that will be coming up in the next couple of pairs from now. I think after the XAUUSD, we should be treating the USDJPY next. So I hope you stay tuned in so that you don't miss out on these ideas we shall be talking about on this pair. All right, we have Innocent Babe in the house. Good morning, Innocent Babe. Happy Friday to you. Well, everything is fine here. Fine, fine, fine. I hope you have a wonderful moment there too. All right, so Doc Took, okay. Good morning to you, Doc Took. Okay, add course. All right, hi, good morning. Glad to hear you are doing fine, Innocent Babe. Good morning, 8603. All right. So in the absence of no questions, let's move on to the next pair. So the next pair we are going to be looking at, is the USDJPY we are treating next. So the next pair we are going to be looking at is the USDJPY. A matter of fact, we had a very profitable situation here on the USDJPY yesterday. Hold on a second. Let me take some. So let's quickly do a replay of what our expectations were as at yesterday's live session. So remember, we took advantage of this buy opportunity right above the 135.300 level on Wednesday. And during the live session yesterday, we were around this point. Hold on a second. We were around the 136.800. And what we noticed here is that price has broken out of the 136.450. That was during our live session yesterday. We saw the breakout of the 136.450. And if you have been part of us since the beginning of this week, you will remember that the 136.450 level was supposed to be our yardstick for trading activities for this week. Remember, we identified that structure at the beginning of the week when we saw how that level at one point in time was holding by pressure. So we saw how that level has been, and after following this reversal pattern we noticed here in the form of a double bottom structure and price breaking out of the neckline of that structure followed by buying pressure right above the 136.450, we said we were going to get ready to buy the USDJPY. And a matter of fact, we bought it right above the 136.700 area. We saw a breakout, we saw a retest of that structure, and we actually joined that rally to the upside. So we had two positions on Monday. We had one here, then we had the second one before we started seeing selling pressure right below the 137.700, which later broke down this bullish trend line. In fact, it was a massive move which I personally missed, but those who took advantage of this move were very, very lucky to have been in that position prior to that move happen. So we saw a situation here as soon as price came into the $134.700 area. We saw that price was caught within a huge channel between the 135.750 and the 134.700 area to further emphasize the indecision in this market. Now, in addition to the structure here, we remember we were within a very important key level, that is the 135 Japanese yen area. That is this area where we said we saw the retest of the structure. Let me quickly show you how important the 135 Japanese yen level is so that we can all be on the same page, especially for those who missed out on our earlier session this week. So let's quickly run through the daily time frame here and see how important the 135 Japanese yen level was. So here we are on the daily time frame here, and let me clean this up so that we can have a clean chart. So see, at the beginning of the week, beginning of the year rather, we had a situation where price has been on a bullish momentum, and as a result of this, we had this bullish trend line figured out. As you can see, price consistently respected this bullish trend line, especially since the month of March. However, during the month of August, we saw a reversal pattern here in the form of a double bottom structure. Then, whenever we have a reversal pattern like this, the next thing we want to be doing is to identify the neckline of that reversal pattern. And we had a neckline identified at around the 135 Japanese yen level, which price broke out of that structure during the later part of the month of August. And in fact, it took price action over 3 to 4 months before price action came back to do a retest of the 135.00 level. As you can see here, we saw the first rejection of that level. We saw the second rejection of that level, evolving into a possible reversal pattern here in the form of a double bottom structure, which might likely incite another wave of bullish momentum if buyers are lucky enough to break out of the neckline of this double bottom structure here, which we were able to identify at the $137.700 level. So if a breakout of the 137.700 level happens today, retest of structure, we might want to be getting ready to join that counter trend opportunity in such a way that we'll be having our TP target right along this bullish trend line, which was broken during the mid-month of November. And from a technical standpoint, whenever we have a breakdown of a structure like this, we expect that one point in time price is likely going to come back and do a retest of that structure, if possible, incite another wave of bearish momentum. So we shall be looking forward to price breaking out of the 137.700 area in order to buy the USDJPY. So you would agree with me, we're at a very critical point here around the 137.700. So if selling pressure continues here, then we might want to join the decline back into the 135 Japanese yen level. But if a breakout with buy pressure right above the structure, we want to be taking advantage of that bullish momentum. So that is the scenario we have here on the daily time frame. I wanted to show you how important the 135 Japanese yen level so that we can be on the same page while I share my ideas on the 1 hour time frame. So with that being said, let's scale back down to the 1 hour time frame, where we shall be going back to the current structure we are talking about. So right back to the 1 hour time frame. So this is the 135 Japanese yen level. And where is the 137.700? Sorry, okay, we have the 137.700 here. So this is the 135 Japanese yen level here, which we said the breakout of the neckline price action came back to do a retest of that structure. So we saw the multiple rejection of this area here, and I told you on Wednesday that we are going to be buying right above the 135.300, and a matter of fact, price respected, moved as expected. Then we also had another position here. Then we also had another position here yesterday with a TP target around the 138 Japanese yen level, and in matter of fact, price hit our TP target exactly during the New York session yesterday. So with the first position, we had over 270 pips. The second position gave us about 220 pips, and the third position gave us about 120 pips in profit. So even though we missed out on the sell position here, we were able to recoup some profit after joining the buy position right above the $135.300 level. So right now, remember I told you yesterday that as soon as price hits our TP target at the 138.00 level, we want to remain patient to see how price action is going to relate to that structure. As you can see, if we zoom out a little further, we can see how that level has been a major determinant of price action since the later part of the month of November. We saw how that level was holding by pressure here before the breakdown of that structure happened during the first day of this month. We saw the breakdown of that structure, and since then we have been witnessing selling pressure below the $138.800 level. And you can see what happened here during the New York session yesterday. We also saw selling pressure below that structure to push price to the downside. So at this point in time, let's see how we will intend to take advantage of any trading opportunity during the New York session today. So first of all, I would like us to have a clean chart. So I would like to delete some unnecessary structures that are not going to be needed during the New York session today. So let me delete all this one so that we can have a clean chart here. So I will be extending this bullish trend line. Remember, this level has been holding bullish momentum since the beginning of this week. So we need to also take that into consideration as well. So that is what we have here. So now if we zoom into the current structure and look at what has been happening here in the last 24 hours. So this is what we have here. This is what I was able to identify here during the early hours of this morning. So you can see following the bearish momentum below the 138.00 level, we saw that as soon as price got into the 137.150, we saw that price was caught within a tight channel between the 137.150 and the 137.400 area. And remember, whenever we have a simple setup like this, like a flat channel following an impulsive move, then we want to be seeing this as a possible trend continuation pattern. So what we are going to be looking forward to whenever we have such situation like this is wait out for a signal which is likely going to come in the form of either a breakdown of the channel or a breakout of the channel to give us an opportunity to join the direction of the price action. So in this scenario here, as at this morning, I think I shared this on my public platform where I said a breakdown of the 137.150 was a good idea for us to join that decline. And we actually took advantage of this move this morning, moved our stop loss to break even, and in fact, price took us out of the position at break even as price came back to our entry point around the 135.150 Japanese yen level. Now, with this situation here, with the current structure we have here, it's looking very, very bearish at this particular point in time. From a technical standpoint, if we take into consideration the breakdown of the 137.150 retest of structure here, and if we scale down to a lower time frame, selling pressure below the 137.150 should be inciting another opportunity to join that decline to the downside. And if a further breakdown of the $136.800 level with selling pressure below the structure, we want to be adding more position to our existing trade. Now, there is a catch here if a sell opportunity comes in here. Now, if we look at this structure here and look at how this trend line has been guiding price action since the beginning of this week, remember we connected the higher lows here to give us that bullish trend line, though we had the breakout of the structure, but fortunately for the buyers, price climbed up again, and since then price has been trading above that structure. So if we join this bearish momentum to the downside, if it happens, and then price comes into this bullish trend line, which also shares a confluence with that key level we said is going to be serving as our yardstick for this trade, for trading activities for this week. We are going to be moving our stop loss accordingly, locking some profits somewhere above below the 136.800, as we want to see how price action is going to relate to that structure. So if we start seeing buy pressure right above the structure, then we want to be getting ready to join the second wave of that bullish momentum. However, if price breaks down the structure and we start seeing selling pressure below the 136.450, then we want to be thinking of adding more position to our existing sell position on the USDJPY. So that is my scenario here on the USDJPY. However, we also want to take into consideration what if price does not continue to the downside, that is below the 137.150, and instead price breaks out of the $137.400 level. And if you look at the structure here, let me zoom out a little bit. Okay, I think I will have to go to a much higher time frame. So let's choose the 3 hours time frame here. So if I go out to the 3 hours time frame here, look at what has been happening here since the later part of the month of October. We saw our price has been finding lower heights, and as a result of this, we had this bearish trend line figured out as price action has consistently respected that bearish trend line. And in the matter of fact, in the last 24 hours, we are around that area, which has a tendency of sending price respecting that trend line one more time to push price to the downside. And if it doesn't, and price breaks out of the 137.400, which I identified on the 1 hour time frame, and see how that level also shares a confluence with the resistance, the bearish trend line here. So if a breakout of that structure happen, that could turn out to be a bullish signal. So I just wanted to show you how important that trend line is here on the higher time frame. So let's go back to our lower time frame. So right back on the 1 hour time frame here. So like I said, if price breaks out of the 137.400, a level which also shares a confluence with the bearish trend line here, and also the resistant level of this channel where price action has been caught within in the last 12 hours now, and we start seeing buy pressure right above that structure, we might want to be getting ready to join the trend continuation to the upside. And if price breaks out of the 138 Japanese yen level, buy pressure above the structure should further emphasize another opportunity to add more position to our buy trade. So these are my views here on the USDJPY. If you have any questions, feel free to drop your inquiries in the comment section, and let's see how I can be of help in that regard. So let's see if you have any questions. I will be taking the next 10 to 15 seconds to read through the chat and see if you have any questions, and we move on to the next pair. All right. So we have, okay, Innocent Babe, thank you. 603, good morning. Hey, Steamroller, good morning to you. Glad to have you around. Oh, how's work today? All right. So 2260. Okay. All right. Greetings to you too as well. All right. I also see Spartano in the house. Good morning, Spartano. Then we also see Zara M. Good morning to you. All right. In the absence of no questions, I guess we're all on the same page. So we shall be moving on to the next pair. So the next pair we are going to be looking at this morning is the XAUUSD, and that is the gold. So, I think I have my positions running already. I have a buy position triggered already. Okay. All right, let's quickly look at what is happening here on the XAUUSD. A matter of fact, we are very profitable on the XAUUSD. Remember, a couple of days ago, we identified a tight channel between the 1,812, that is the resistant level of this channel here, and we also identified the support level of the channel at around the 1,806. And you know how we used to trace such channels. Whenever we have a breakout or breakdown of the channel, we want to be joining that direction of price action. And what happened here on Wednesday was quite interesting, as we saw the breakdown retest of that channel, which gave us a very beautiful opportunity to join that decline to the downside. And a matter of fact, we had multiple entries as we joined here. We had a position running from the below the 1,806. We also had a position running below the 1,800, and we had another position running below the $1,788.50 level, as price gave us over, let's see, the first position gave us about 3,000 pips. The second position gave us about over 2,400 pips, and the third position gave us about 1,300 pips. So on the XAUUSD, we are very profitable for this week. Even prior to that sell position here, we had this buy opportunity which gave us over 2,000 pips also on the XAUUSD. So in fact, we are very profitable, and you might likely choose not to even trade this pair for today, as the profit is able to cover whatever expectation you had prior to the opening of this week. So right now we are at a very tight consolidation phase here in the last 48 hours, I guess. I think 24, 36 hours, we have been in a tight consolidation phase between the $1,783 level that you can see here, and we had a support level at the 1,775 to further emphasize the indecision in this market. And whenever we have a structure like this, you know, we always want to be patient enough to wait out for signals from the market in order to join whatever direction price action is going to be going. So in this kind of situation now, there are two possible setups we are going to be looking forward to trade the XAUUSD. And the first one is, if a breakdown of this channel happens, that is the 1,775 level with a retest of structure, we want to be joining that decline to the downside. And if a breakout of that structure happens right above the 1,783, we want to be looking forward to buying the XAUUSD. So these are the two scenarios we shall be looking forward to as we head into the New York session today. So let us be very patient here. We shouldn't be in a hurry. We're already profitable for this week, and let's wait out for credible structures in order for us to join any possible potential here. Now, in addition to the current structure, I was able to identify another trend line that we shall be using to guide our trading activities for today. Now, how did I get about this? We had buyers respect this trend line. We saw buying pressure above this trend line here. We saw another one here during the course of Wednesday's trading session. We also saw another one here yesterday morning before the breakdown of that structure happened here, after which we started seeing selling pressure here again, and it appears price has broken above that trend line one more time, which is more or less tending towards a bullish expectation for today. But in as much as we are looking forward to this bullish expectation, we don't want to ignore the possibility that price might likely break down that channel to incite a wave of bearish momentum at this particular point in time. So we have a trend line here, and we also have a channel to guide our action for today. Then one thing I also saw on the 50 minutes time frame made me to change my views of selling the XAUUSD for today. And what is, I share this on my public platform anyway. First of all, I started seeing buy pressure right above the 1,775. And what I did when I saw this buy pressure here is to scale down to a much lower time frame, like the 50 minutes time frame, so that I can see what is really going on around that area. So when we scale down to the 50 minutes time frame here, things become a little bit clearer at this particular point in time. So look at what we had here. We saw this impulsive move to the downside, and as soon as price tested the 1,775, we started seeing buy pressure around this area. So what I did immediately was to identify the neckline area at the 1,778, and I placed a buy stop prior to the opening of this live session, where I said if price breaks out of the 1,778, I want to be joining that bullish momentum. And you can see why I have tend towards buying this. First of all, price broke out of the trend line. Remember, broke out of the trend line. And since then, we have been seeing buy pressure above that trend line. And also, it also shares a confluence with the 1,775. Okay, so and as a result of that, we had a neckline. So to further give us a good confirmation to buy, so I placed my buy stop right above the 1,778. And for those who have seen this opportunity, well done to you guys for seeing this. And for those who had missed out, well, I still hope the market is going to give us another opportunity to join this move to the upside. So what I'm looking forward to at this point is this. So I've joined already. I had a position triggered here already. So we shall be waiting for another opportunity to come in if price breaks out of the $1,783 level. Remember, this level is a resistant point of the channel where price has been respecting in the last 24 to 36 hours here. So I want to be seeing buy pressure above the 1,783 to further add more position to my existing trade. And for those who had missed out on this opportunity here, well, you could be looking forward to joining at a breakout retest of that structure. So whenever we have a breakout of the 1,783, you want to quickly scale down to your lower time frame. Look out for buying pressure above the 1,783 and take advantage of the bullish momentum to the upside. So if we take advantage of this move to the upside, where will our take profit target be? Well, we want to be scaling up to a much higher time frame so that we can see things more clearly, so that we can decide where we want to be placing our take profit target. Well, if we look at the structure here, and since price rejected the $1,825 level, we saw a bearish momentum to the downside, after which we started seeing buy pressure right above the 1,775. So this might likely be a retracement of that impulsive move, after which another wave of bearish momentum will happen. So this is more or less a counter trend opportunity. So what I'll be doing here is that we shall be projecting that the TP target should fall within our golden zone area, where we are going to be looking out for selling opportunity. So in order to get this, we want to be bringing out our Fibonacci retracement tool, run it through the previous impulse leg, and we should be aiming at an area between the 50 and the 78.6% area for our take profit target. So I have a take profit target for buyers here, and this area will also be serving as a potential sell window if we start seeing reversal pattern within that area. So let's label this area for the sake of clarity so that we can have a visual understanding of what we are talking about here. So I'll give this a yellow. So here we are. And if you look at the structure here, let me delete the retracement tool. If you look at this zone here, it shares a confluence with the 1,800. Remember how important the $1,800 level is. Remember on the daily time frame, it has been a strong selling niche for participants in this market. Let me quickly show you how important the $1,800 level is on the daily time frame. So this is the daily time frame here, and we talked about this during the our previous session, where we saw how important the $1,800 level has been since the beginning of the year. You saw the first couple of months this year, this level was holding buy pressure. We saw buy pressure here again in the month of May before the level was finally broken down in the month of July. And the latter half of this year, price has been trading below the $1,800 level to further emphasize the strength of the sellers at this particular point in time. And in the last 2 weeks here, we saw how sellers continue to take over the market from the buyers, as every attempt by the buyers to break above the 1,800 has been met with strong resistance from the sellers. So this is the $1,800 level. You will agree with me how important that level is. So this is what I wanted to show you on the daily time frame. So let's scale back down to the 1 hour time frame and let's continue with our analysis here. So right now we are on the 1 hour time frame. So like I said, if this buy momentum continues in such a way that it breaks out of the $1,783 level, that's a counter trend opportunity. We shall be looking for our TP target within this area. It could be here, it could be the trend line, it could be 1,800. But the most important structure we shall be looking forward to here is a selling opportunity in the form of a reversal pattern, breakdown rate on our lower time frame. Then we could actually get ready to join the trend continuation to the downside. So this is a counter trend opportunity we want to be taking advantage of if price breaks out of the 1,783 level. So with that being said, what happens if price does not climb to the upside? That is, if price does not climb up to the 1,783 to push price here before we're expecting that bearish momentum. What if that does not happen? So we also want to get ourselves prepared to take advantage of any other contrary opportunity that comes in here. So what I'll be suggesting here is that the 1,775 level shall be a very good area to look out for certain opportunities if price breaks down that structure. So if sellers takes us out of the buy position here in such a way that it breaks down the 1,775, then the channel that is identified here is going to definitely turn out to be a trend continuation pattern in the form of a bearish rectangular pattern that would likely send price crashing further to the downside. So we want to keep our options open, despite the fact that we are looking forward to a buy opportunity here to take advantage of this counter trend opportunity. We should not ignore the possibility that price could likely break down the 1,775. So these are my views here on the XAUUSD. I hope I've made myself very clear on the XAUUSD. But if you think that there is an aspect you don't really understand, feel free to drop your inquiries in the comment section. I will be willing to shed more light in that regard. Now, moving on to the last pair for today, and that is the AUDCAD. And the AUDCAD has been very profitable for us since the beginning of the week. I think this is a pair that Steamroller introduced to us at the beginning of the week, and we are quite profitable here. So thanks to Steamroller for giving us this pair to work with for this week. And see what we had here since the beginning of the week. On Monday, we had a situation where we were looking for selling pressure below the 0.92550, which we took advantage of and gave us about 50 pips thereabout. And then on Tuesday morning, we are doing our live session. we were using the 0.9220 as a yardstick for trading activities, where we said if price breaks down that structure, we want to be looking for selling opportunity. And if we see buy pressure above the structure, we want to be looking out for buying opportunity. And the latter is what happened here, as price action moved exceedingly well, though we placed our TP target at around the 0.93 level, which gave us about 80 pips in profit, which is not bad anyways. And during the live session yesterday, we had a situation running here. Remember, okay, on Wednesday, we had a situation running here where we said we've been witnessing selling pressure below the 0.933 level, and we could only add more position to our buy trade if price breaks out of the structure. But unfortunately for buyers, this was met by stiff resistance from the sellers, as price was unable to break the previous structure here, and with selling pressure below the 0.9339300 level, we were able to join another wave of bearish momentum, which gave us over 100 pips in profit. And I told you yesterday that for those who had missed out on this opportunity, on a second, what happened here? Okay, I said yesterday during the live session that for those who had missed out on this opportunity, let's wait out for the market to give us a second chance, which might likely come in the form of a breakdown of the 0.91950 level. I said breakdown, retest of the structure, we could be joining the decline to the downside. So we have two options. The first one is a breakdown, retest of the 0.9220 level, which shares a confluence with that trend line. Then we could join the decline to the downside. And this is exactly what happened here. So for those who are taking advantage of the opportunity right below the 0.9220 level, kudos to you guys for being on standby, as you will currently be running with over 70 pips in profit. So my advice right now is that price appears not to be heading towards our TP target, which we have situated between the 0.91 and the 0.900 level. As we can see here, that buyers begin to buy pressure as beginning to come in from the 0.913 level. We saw buy pressure here. So in the last 12-18 hours now, we have been witnessing buy pressure around that area, which is likely going to be negating all sell continuation at this particular point in time. So what I want us to be doing here, first of all, is to lock in some profit. So I will be suggesting somewhere right above the 0.91650 level, lock in your profit there, lock in your position so that we don't get caught up in any sudden pullback. Sorry for that break in transmission, please. So like I said earlier, let's lock in our profit around the 0.91650 level. Let's see what is going to happen here. If the buy pressure here is going to continue, or sellers are going to break down that structure. So to make our job easy during the New York session today, let's quickly identify that structure there. That is where the buy zone is. That is the 0.9300 level. So let's label this area for the sake of clarity. So we have the 0.93300 level figured out at that point. So I'll place it right at the bottom right hand side of the screen to make things a little bit clearer. So this is what we are going to be looking forward to here. And I would like to extend this bearish trend line further to the downside. Aha. So this is what we have here right now. So if price breaks down the 0.93300 level, then that is a bearish signal, taking out all the buy position here to give us liquidity to push price to the downside. So if selling pressure appears below the structure, then we want to be thinking of adding more position to our existing trade. And if a further breakdown of the 0.91 happens, selling pressure below that structure, we want to be adding more position to our existing trade here. So that is one scenario we are going to be looking forward to sell the AUDCAD. So if price does not break down that structure, we are not thinking of selling. However, if buyers come in here, and if you look at the 0.9330, you see that this level also has been a strong buying niche in the past. So there is a likelihood that that area might likely incite another wave of bullish momentum. So it could evolve into a double bottom structure. That is, if price does not break the previous low here, to evolve into a double bottom structure where a breakout of the neckline of that double bottom structure, which also will be sharing a confluence with the trend line, could give us another confirmation that another wave of bullish momentum is coming in at this particular point in time. So in order to make things easy for the buy position here, so let's look at this area as the neckline area of this reversal pattern. So we have this figured out for our reverse, for our neckline. So we have this 0.91720, I guess. 0.91720. We should be having that as the neckline of that reversal pattern. So anywhere above that structure, if a breakout of that structure happens, we might be looking forward to joining a trend continuation. So a breakout of the neckline followed by pressure right above that structure should be giving us our opportunity to join a trend continuation to the upside. So these are my views on the AUDCAD. I hope I was able to make things a little bit simpler for us. And let's quickly run through, do a quick recap of what we talked about today before we draw the curtain. Happy Friday. Okay, Steamroller. All right. That's good news. Glad to hear that. It's going to go up now in my opinion. All right, Sam. Okay. Okay. All right, everyone. So let's quickly do a recap of what we talked about today before we draw the curtain for today. So the first commodity we talked about today is the US oil. And what is our expectation on the US oil? Remember, we have been profitable so far for this week. You could choose not to trade today. It's okay. We've been profitable. And we had a sell position running at the beginning of the week. Yesterday we had a sell position running. We had two positions running right now. And I've told you to move your stop loss accordingly. Somewhere right about the $75 level seems most appropriate. And I told you that we want to remain patient here to wait out and see how price action is going to be relating to the $74 level to decide if we are going to be adding more position to our sell trade or we are going to be getting ready to buy the US oil. So these are the two scenarios we are looking forward to. If we start seeing buy pressure above this area, then on our lower time frame, we want to be taking advantage of a buy opportunity. In fact, I will prefer that price breaks out of the $75 area for me to be thinking of buying the US oil. However, if price breaks down the $74 level with selling pressure below that structure, well, we want to be looking forward to another opportunity to add more position to our exiting trade. Remember, we have our TP target zone between the 74 and the $72.15 level, where I said we might be looking out for buy pressure that will incite another wave of bullish momentum. So that is that on the US oil for today. Like I said, lock in your sell position right now and you could decide not to trade anymore. For today, we have been very profitable for this week. So now we moved on to talk about the US tech, which is also in profit right now. Remember, we had a sell position running yesterday. So we took advantage of the breakdown retest of the 11,560 rather. And then we took advantage of the breakdown of this channel below the 11,330. Sorry for that break in transmission. So we had the breakdown of 1130 here, and I said, for those who had missed out on this opportunity, let's wait out and see if the market is going to be giving us a second chance to add more position to this trade. So we shall be looking at two scenarios here. First of all, price coming back to do the retest of the 11,330. Look out for selling pressure on our lower time frame there. We could join the decline to the downside. And if that does not happen, and instead price breaks down the 11,200, selling pressure below the 11,200 should give us another opportunity to join that decline to the downside. However, if price breaks out of the 11,330 to the upside, then we might likely be seeing this as a counter trend opportunity where price might retrace back into the $11,700 level before another wave of bearish momentum happens. Remember, we had the breakdown of the 11,700 here yesterday. And remember how important I said that level is on our daily time frame. So price might likely come back there, then do a retest of structure to send another wave to the downside. So let's be patient here on the US tech. Then we went on to talk about the USDJPY, where we already have a sell position triggered right now as price breaks down the 137.150. Did a retest of that structure, and we have witnessing the sell momentum here. So if you are in this trade, well done. Right now, move your stop loss to break even, protect your position, and if a further breakdown of the 136.800 happens, then we want to be adding more position to our existing trade. And if a further breakdown of the 136.450, a level which shares a confluence with that bullish trend line we identified earlier, then we want to be adding another position to our existing trade. Now, we moved on to talk about the XAUUSD, where I told you I got my buy position triggered right above the 1,778 after identifying buy pressure right above the 1,775. And for those who had missed out on this opportunity, I told you that you should scale down to your lower time frame. Look out for a breakout retest of the 1,783. Look out for buying pressure above the structure. Then you want to be joining a rally to the upside. However, if at any point in time during the New York session, if price action takes us out of our buy position in such a way that it breaks down the 1,775 with selling pressure below the structure, we want to be joining that decline to the downside. Then we went on to close the day with the AUDCAD, which is profitable right now, and we were able to identify a buy a buy zone around the 0.933 level. So I told you move your stop loss accordingly, lock in some profit. So we are looking forward to price breaking down the structure to give us a leverage to add more position to our sell position. And if that does not happen, price breaks out of the $0.91720 level, which will be serving as a neckline of that reversal pattern. Buy pressure above the structure, breaking out of the bearish trend line is a good opportunity to join a counter trend position on the AUDCAD. So on this note, I would like to call it a day here. It has been a wonderful and profitable week for every one of us on the Extreme Speed Life app so far for this week. Well done, guys. Congratulations, guys. And I had a memorable time with you guys, and I look forward to seeing you again next week, same time, 10 a.m. UTC, 11 a.m. West African time. And let's come again to analyze my financial market and get ready for the new week. So best of luck once again for today, and I hope that you are able to make some more profit. Please ensure you locked in some profit, and remember, we are not getting too excited when we cite a breakdown of structure. We want to be patient enough to wait out for price action to give us further confirmation so that we can either add more position or join whichever direction price is heading towards. So do have a wonderful evening, and bye-bye.